Have you ever wondered where the concept of stock markets originated? To answer this, we must journey back in time to the 17th century, to the bustling streets of Amsterdam. Here, in the heart of the Dutch Republic, the seeds of stock markets were sown with the establishment of the Amsterdam Stock Exchange in 1602. This was the world's first official stock exchange, where shares of the Dutch East India Company, a powerful multinational corporation, were traded. This innovation was revolutionary. It invited individuals to invest their capital in promising ventures, in return for a share of the profits. A concept that would shape the global economy for centuries to come. As the idea of a stock market began to take root, it spread across the European continent. By the late 17th century, London had caught the trading bug. The London Stock Exchange, established in 1698, began as an open outcry system, where traders would shout their prices in a packed trading pit. A far cry from the automated trading we are accustomed to today, but a crucial step in the evolution of financial markets. The 18th century saw the birth of the New York Stock Exchange, an institution that would grow to become the largest and most influential stock exchange in the world. Founded in 1792, under a buttonwood tree on Wall Street, the New York Stock Exchange became a symbol of America's burgeoning financial power. These early stock markets facilitated the flow of capital, fueling economic growth and innovation. They democratized finance, allowing ordinary people to share in the profits of successful companies. And while they were not without their challenges and controversies, they laid the foundation for the complex and dynamic global financial system we know today. The groundwork had been laid, the financial world was about to witness a revolution. Enter Wall Street, the heart of the global financial system. A bustling hive of activity, this narrow street in New York City quickly gained prominence in the late 19th and early 20th centuries, becoming the epicenter of the world's financial dealings. At the heart of Wall Street's rise was the New York Stock Exchange, a robust marketplace where shares were bought and sold. This was the place where fortunes were made and lost, where dreams were realized and shattered. The stakes were high, the rewards even higher. However, Wall Street's seemingly unstoppable ascendance came to a shocking halt in October of 1929. The Wall Street crash, as it came to be known, was a cataclysmic event that sent shockwaves around the globe. Triggered by a stock market bubble, it marked the beginning of the Great Depression, a period of severe economic downturn that lasted for nearly a decade. In the aftermath of the crash, it became clear that the financial markets needed oversight. Thus, in the mid-30s, the U.S. government established the Securities and Exchange Commission. Its role was to regulate the markets, provide transparency, and protect investors from fraudulent practices. The next major turning point came in the early 70s with the introduction of the NASDAQ, short for National Association of Securities Dealers, automated quotations. This was the world's first electronic stock market, a groundbreaking innovation that changed the face of trading. With the NASDAQ, transactions were faster, more efficient, and could be conducted from anywhere in the world. This technological revolution marked a significant shift in the way stocks were traded. No longer were brokers and traders confined to physical trading floors. Instead, they could execute trades with the click of a button, ushering in an era of unprecedented growth and prosperity. And so, the era of electronic trading began, setting the stage for a new chapter in stock market history. This was the dawn of a new age, a time of rapid technological advancement that would forever change the world of finance. As we stepped into the 21st century, the stock market was about to experience a digital revolution. This transformative era was marked by a significant shift in how trading was conducted. The internet, with its formidable power of connectivity, began to reshape the landscape of stock markets around the globe. Prior to this revolution, trading was a laborious process, often involving a series of phone calls and paperwork. The dawn of the internet age, however, ushered in a new era of convenience and efficiency. Online trading platforms sprouted up, allowing investors to buy and sell stocks at the click of a button. These platforms democratized the stock market like never before, making it accessible to individuals far removed from the bustling trading floors of Wall Street. But the digital revolution didn't stop at online platforms. Another game-changer was the rise of algorithmic trading. Complex computer programs began to take the driver's seat, executing trades at lightning speed based on preset criteria. This algorithmic approach to trading not only increased the speed and efficiency of transactions but also minimized the human error factor, providing a new level of precision to stock market operations. However, this digital revolution was not without its challenges. In fact, it was during this era that we faced one of the most significant financial crises in history. The year 2008 marked a turning point, as economies worldwide grappled with a financial meltdown. This crisis sent shockwaves through global stock markets, causing unprecedented volatility and uncertainty. Yet in the face of adversity, the stock market demonstrated its resilience. The crisis became a catalyst for change, prompting regulators to implement stricter controls and encouraging investors to be more discerning in their decisions. The digital revolution had indeed changed the game, but it also brought about a newfound sense of responsibility and caution. The stage was set and the world was ready for a financial evolution unlike any other. As we navigated through the aftermath of the crisis, we began to see the emergence of a new frontier in finance, one that would take the digital revolution to the next level. Just as we thought the financial world had seen it all, along came cryptocurrencies. A veritable revolution, cryptocurrencies exploded onto the scene in 2009 with the creation of Bitcoin, alter the dynamics of our financial systems forever. In the heart of this revolution lies a revolutionary piece of technology: the blockchain. This decentralized, transparent ledger system allows transactions to be recorded in a way that's virtually impervious to fraud. It's the backbone of Bitcoin and every other cryptocurrency that has since followed, from Ethereum to Dogecoin, and it's what makes them so uniquely powerful. But how do you trade these digital assets? Enter the crypto exchanges. These platforms like Binance and Coinbase serve as digital marketplaces where individuals can buy, sell, and trade cryptocurrencies, much like stock exchanges do for traditional securities. They've become the Wall Street of the digital world, facilitating billions of dollars in transactions every day. With such a robust infrastructure in place, it's no surprise that cryptocurrencies have had a significant impact on traditional stock markets. They've introduced a whole new asset class for investors to consider, bringing with them unprecedented levels of volatility and potential for high returns. They've also raised some serious questions about regulation and the future of finance. Yet in spite of the challenges, cryptocurrencies have proven themselves to be more than just a passing trend. They've become a testament to the power of innovation, pushing the boundaries of what's possible in the world of finance. And as we continue to navigate this digital age, they offer a tantalizing glimpse into what the future might hold. In the grand scheme of things, cryptocurrencies are still in their infancy, but their impact is undeniable and their potential is vast. They've given us a whole new way to think about money, about transactions, about trust. And they've shown us that even in a world as old and established as finance, there's always room for disruption, for innovation, for progress. The journey of stock markets has been a dynamic one, from physical trading floors to digital platforms, and now, the world of crypto. What lies ahead in the ever-evolving world of stock markets? As we gaze into the crystal ball of finance, we can see a few key trends shaping the future. Decentralization is one of them. This concept, already integral to cryptocurrencies, is set to become even more prominent. Imagine a world where middlemen are obsolete and transactions are peer-to-peer. This isn't a far-off fantasy, it's a tangible prospect. Next, we have the tokenization of assets. This could revolutionize how we invest and trade, extending beyond stocks to real estate, art, and more. Your portfolio might soon contain a fraction of a Picasso or a sliver of a skyscraper. Lastly, let's not forget the potential impact of quantum computing. With its ability to process complex calculations at lightning speed, it could entirely reshape trading strategies and market analysis. As we continue to witness the evolution of stock markets, one thing is certain: the only constant in the financial world is change. Remember to subscribe for more enlightening content. Until next time.